If you think that you are paying a high tax bill and if you're looking for an option to reduce it, this video is for you because I'm going to explain how to optimize your taxes when you're working worldwide. Hi, my name is Rusudan. I have been working with Nomad for more than 3 years now, and we have helped, I think, more than 1,000 clients legally reduce their taxes, get citizenships, and go where they are treated best. So in today's video, I'm going to talk about the legal ways you can optimize your tax structure and make sure that you are using all the opportunities out there to reduce your tax bill. There are certain ways and certain structures you can implement in your business and personal life to reduce your tax bill. The first step you have to take with that is to review your current situation. So what's your business tax like? What's your personal tax like? What are the jurisdictions that you're working with? And if you're in one country, I think that the starting point is really easy because you have to research that one country. One other thing that you have to think about with this is where are your clients? Where is your money coming from? Some people will be asking questions about that, some countries, because there are certain countries where you pay tax due to getting the money from certain clients, certain jurisdictions. So it's important to also know that part and also consider that, because but you have to make sure that you know where it plays in this puzzle that you're building right now. There are different ways to optimize your tax. The first one that comes to mind right now is optimizing it through your residency and citizenship. If you were born in the US, your tax bill is highly likely to be higher than some of other countries. And even if you move outside of the US, you still will not be able to fully remove tax liabilities in the US because that's the way the country works there. So to avoid that or to remove that, you can establish a citizenship in another country, or get a tax residency in another country, or just a residency and tax residency, right? So most of the countries have this test of if you spend 183 days in the country, you become a resident there. So you have to pay tax there because you become a tax resident there too. So it's really simple. Not every country follows that. There are some nuances in that too, but we're not going to delve into that because the general understanding still applies in regards to optimizing your tax. So you can get a citizenship, you can get a tax residence, and it's going to help you with your personal taxes as well as your business, because everything that you're making with your business then moves up to you as a dividend or any kind of other payout, right? So it's important to go through the connection there and make sure that it's all working and every step is tax optimized. It's not just one thing that you are thinking about and focusing on. You have to make sure that everything is working well. One other thing that you can do to optimize your tax is correctly structure your business. And this is something that I think we see lots of people struggle. You see lots of opportunities, but it also means that you have lots of choices. And usually in this field, we see a trend, right? Everybody's going there, so it's going to work for me. And you just move there, but it turns out that it may not be working so well for you because your situation is different from your friends or your business partners or a person from the internet. So it's very important to personalize any research that you're doing to make sure that you are taking into consideration your nuances, your circumstances, and not just reading through a script of a template that we think that is going to work for everybody, because it's from our experience, it never does. It's not one plan that is applicable to anyone in the world. Structuring your business is really huge flexible tool you can use. You have to make sure that you are not limited. First, geographical locations, you are never limited. There are lots of options out there and you can use that. The biggest thing is when you're thinking about tax, you have to know what kind of different tax systems are out there, right? So there are tax systems where they're poorly tax havens, right? There is no tax levied in those countries or jurisdictions. And then you have, let's say, territorial tax systems. And these territorial tax systems only levy tax on the income that's sourced within this jurisdiction. For example, Hong Kong. If you have Hong Kong sourced income, you pay tax 16.5%. But if you don't have that income, then you don't pay anything on that. You can use the benefit of the tax exemption there. So, and then you have countries like the US or Australia where if you do not literally renounce your citizenship with the US, you will always be liable on some tax with them. It's not only a decision on paper, because on paper, like the less tax you pay, the better, but it's also a bit of a more personal decision, because at last point can be for you to renounce the citizenship or cut ties to certain country. For example, you may need to like not spend certain amount of days there and like limit your presence in that country. So it's a very huge decision, but it's at the same time very logical one in regards to like it literally gives you a benefit of legally reducing your taxes. So it's an important one to take into consideration. Also, there are some countries who levy like maybe their like ordinary business as usual tax system is like they have taxes, etc. But they have like very nuanced regimes. For example, a lump sum tax in Greece or Italy, where it's very attractive for high net worth individuals, because in ordinary situations your tax bill would be really huge. But in this case, in these countries, you can just pay one lump sum and that covers all your worldwide income, which is an amazing, I think, opportunity. It's less expensive. It also gives you like it's very straightforward. You don't have to file lots of things. It's just really easy to follow. Because you are reducing your taxes, or you are going to a country where you pay no tax at all, there are situations you're close to zero. It doesn't mean that you don't have filing requirements, because sometimes we see people make that mistake. If you don't have to pay any tax, it doesn't mean that you're just not doing anything, like no compliance or anything. So you have to make sure that you're following all the like mundane paperwork requirements. You're filing your forms, you're like in different, like it can be a tax form, it can be something with the ministry or something with different agencies in the country, or even the banking system, etc. So no tax doesn't mean no filing requirement. So it's very important to distinguish between these two, because you can enjoy this no tax regime, but if you don't comply, I think that it's very easy for you to lose no longer be eligible for this tax regime, or maybe even have some fines or penalty depending on the country. So it's a very important nuance, which like it doesn't cost you anything. So it's important to follow. So I think that one other thing that it really comes up a lot in these conversations about tax optimization is digital currencies and cryptocurrencies, right? So we see a rise in compliance requirements. Lots of countries are strengthening their laws in this regard, and for you to pay capital gains tax, for example, on the assets and on your crypto assets. But there are still countries that have not adopted that law. So it's very important to be the first one there and make sure that you are using this benefit and you move into that jurisdiction before this tax is adopted, because we see the global movement towards taxing more things than before. I think that crypto assets are one thing that are a bit more flexible at the moment, but it's not always going to be the case. And we've seen cases like that before, where business goes more forward, things develop. But the tax may not always be in close step with that. So it gives you some time leg room for you to have this business tax free. But at some point it's going to catch up. So it's important to make sure that you are prepared for that, because those things it doesn't happen in one day. You need to prepare, you need to take certain steps, move to a country, establish a company. There are lots of steps there. So it's important. It's better to be early than late, because if you're late, it means that you're just not eligible for the benefits for that regime. We can go into more details with the tax optimization strategies, but I think that one common thing that we always see with our clients and even our nomad internal personal tax structures is that it's very nuanced and it's very personalized. So it's very difficult for me or anybody, even the tax advisors that we work with, to tell you that this is the template, this is how it's going to work. So the first step that we always do is you just review your current situation and you plan for your specific cases. So that's why it's very important to consult with tax advisors that are going to take into consideration your whole situation, different countries that you are doing business or living in or have any connection to. So the first step is always research and the planning and making sure that you do not take further steps without seeing the whole picture. And the goal is not paying zero tax. Sometimes the goal can be paying some tax, a lower rate tax. That's why you should watch more videos on our channel. And if you want to become our client, get access to internal expertise of Nomad Capitalist, you can go to nomadcapitalist.com and apply now.